Hey everybody, it's Christopher Smith. This is my FibLines Quarterly Update for September 25th, 2016. So for agenda for today, we'll take a quick look at the markets. We'll take a look at our FibLines symbols and see what the FibLines have told us recently and what we expect going forward. And let's talk about some other stuff that I think it might be interesting. I thought it's been helpful to me, and I'd like to share with you as well. So first is for the general markets. Let's go on and take a look at SPY. So market's been kind of an interesting situation here. They've been sort of melting up this year, and what's curious about this is that usually stocks and bonds go in opposite directions, but both stocks and bonds have been going higher, and that's kind of unusual because usually they go in opposite directions. So most of your major indexes, your SPY, your DIA, and your QQQ are up in the sort of 5 to 6% range, and your IWM on the other hand is up nearly 11%, so making up for some recent underperformance. So for the SPY, we've sort of been moving sideways off this, I think it's the 261 line for quite a while. Finally broke through to the upside, and now we're kind of moving back and forth here. And recently, after having broken out to new all-time highs, due to some strength in a couple of select symbols, Apple probably most specifically. So if we go to the fourth level lines on the QQQ, for example, we go in here and open up show all 4 lines. You can see that we had some recent action here where we, let's go back. We broke out of this orange line here. We kind of moving sideways back and forth in the second level gray line. It just recently got deflected off of this high line here on this action. And again, some of these major stocks, mostly Apple's been dragging the market higher the last couple weeks or so here. The other interesting thing is that in this past quarter, I became more of a bond investor. I've kind of historically stayed away from bonds, but I realized that you really have to be in them long term for a good balanced portfolio. And the ones I got into are the PIMCO Total Return Bond Fund, BOND, which had a pretty good year, is up about 3% for the year with 3% yield. And another one is BAB, the PowerShares Build America Bond Fund, which is a little more aggressive, a little longer term. Is up 7% for the year with about a 4.5% yield. So the point here is that both stocks and bonds have been inflating for the year, clearly at a faster rate than the economy is. This is really just due to the chronic low interest rates from the Fed. So risk has definitely been increasing to the upside here, but as the CNBC and the other markets say, Tina, there is no alternative. There's really just not much, no other place to put your money. So we talked about the fib lines on the major indexes. Again, they haven't been too much help lately. We did have a slightly better, or I should say better reactions to the lines on both the DJI, which is the Dow Jones Index. So we had a nice move off of this, recently off of this 261 line, I believe it is. The other one is DJU, which is the utility sector, also been bid up fiercely in this chase for yield, but recently sold off pretty intensely. The other thing you might notice here that I've sent an update out in the last few weeks is the range bands. So I've talked about the range bands indicators in prior updates, but I added a new feature here called stop dots. If you take a look at this, as you know, the range bands are just envelopes around price. So I added these stop dots such that when the stock is in an uptrend and the bars are painted blue, you have these dots underneath, which represent the level at which the trend would change to negative. So if the bars are blue, the dots are red below the market. If the bars are red, the dots are blue above the market. And I find that the range bands in general are turning out to be a lot more useful a trading tool than the fib lines themselves. So this is my most recent enhancement on these, the stop dots, and that is free up on the FibTool Sell Store, and also I've sent it out to my FibLines subscribers as well. So talk a little bit more about that at the very end. Okay, so that's the major markets. As terms of individual stocks, the first one I want to talk about is Amazon. Amazon's clearly been the story of the quarter. When I last did my quarterly update, Amazon was threatening the 423 line right here at about the 725 level, and since then just rocketed higher. And just to give you an idea how my interpretation changed on Amazon, let's take this out. And one of the things I noticed about FibLines, and one of the principles I come up with, is that the ending point of wave one can be a gap, either the bottom of the gap or the top of the gap. My previous interpretation for Amazon looked like this. Bottom of wave one was this horizontal area here, and the top was the bottom of this gap area after earnings. All I did in this most recent thing was I moved the top of wave one to the bottom of this gap, and we got a completely different interpretation. Let me just show you what that looks like. Go back to studies, I'm going to add the FibLines back in. And just by moving that the FibLines to the top of that gap instead of the bottom, you can see that we have a different interpretation that also looked equally valid. Really, you had this 261 line right here, and zooming out to the future, our 423 line is up around 472. And just going into some more recent action here, we can see, let's just auto zoom that back out, that this is my latest interpretation for Amazon, and we've just come up against this orange line here, and we're set to pull back a little bit. So I fully expect Amazon to eventually take out this 472 level and probably go much higher. It's just this huge monster of a stock, and it's, you know, we know, like, for example, the QQQ, the Nasdaq 100, is capitalization weighted, so it's big stocks like this that just drag the index higher. And I'm not in Amazon myself, but as we'll see later, it does very well with my this system I've been working on based on the range bands. And I am in the QQQ as well, though, so as some of these big stocks drag the market higher, such as Apple, Amazon, Facebook, etc., I am benefiting by being along the Qs. Okay, another one is Alibaba. I've been following this stock for a couple of years since it went public. And my most recent quarterly update, I did a downside reinterpretation here, which is going down, down, down. But I've noticed that since then, it's actually moved back up to the upside. So when I was looking at reinterpretations, I was thinking, well, okay, this looks like the top of wave one. This looks like the bottom. I was going to go with that interpretation, but one interesting thing I realized is that the top of this area here, the top of that wave one, almost corresponds exactly to my original wave one, which was over here. So what I decided to do is go back to my original interpretation of Alibaba, where wave one is, bottom of wave one is here, top of wave one is over here at the call it the 119.50 area, which was the post-IPO high move. So Alibaba's moving up very nicely recently, and I fully expect Alibaba to kind of get moved back, kind of get slurped back up to the 119 area here as prices kind of get pulled up to a magnitude of this old point here, which was that post-IPO high. Baba's also been called the Amazon of China, so I think some of this move here in Alibaba is really in sympathy with Amazon. So I like Alibaba to the long side here, and you can see the range bands are also positive, with the stop dots being down in the 100 area. Okay, next up we have Facebook, one of my favorite stocks. I've been in this one for years. I've always been a fan of it. And my last quarter that was sort of down in the dumps. I'm back here because it was sort of languishing in the mid-teens area. But I stuck with it, and I'm happy I did because it's still moving higher. And remember, Facebook, as I mentioned in the last update, tends to rocket higher after earnings, and I kind of go into these periods of doldrums and just move around sideways. So still like Facebook. That's recently deflected off this orange line here. The valuation's high at about P's about 60, which is certainly high compared to, say, an Apple. But the earnings growth rate was over 100% of the last year or so. I still expect Facebook to go much higher, although the risk of underperformance is clearly higher since they have to keep up this 100% earnings growth rate to maintain this multiple. Okay, next up we have IBM. This I had previously interpreted to the downside, but I went back to a long side interpretation. I think it's moving, it's improving here. It's been a beleaguered Dow stock. It's been on hard times, and they're still really searching for some revenue growth, trying to make a go of it with this Watson AI system. So this is the beginning and end of wave one I have over here back in 2010. to about, I guess what would have been about February of 2010 to say the top would be about October of 2010 is my wave one. And looking more recently in the future, you notice that you had some support and resistance right about that same area. So I'm sticking with that interpretation, and I think IBM's probably going to be recovering to the upside. Let's put it that way. I don't think it's going to run away to the upside or anything, but it's clearly recovering, and it's one of the ones that I've interpreted to the upside. Goldman Sachs, I talked about in the last update. I like Goldman Sachs. I think it's probably your best financial out there. The price is a little high in the 160s, but what I've been doing with this one is just buying the stock. I just bought it just under the, I believe it was the 159 area, and I've just been selling the calls. So just recently I sold this, earlier in the week, I sold the October monthly 170 calls for 320 or something. So just buying the stock and selling the calls has been a pretty reliable way to make money lately. You know, it's a relatively high price stock, so you could probably do the similar thing with a much lower price stock without tying up nearly as much capital. But that's what I've been doing. The other one is Gilead, JLD. I've been with this one also for the last few quarters. This is not doing so well. You know, the drug sector in general has really been under pressure. And Gilead's clearly not performing well here. So, you know, there's been some concerns with the possibility of Hillary Clinton getting elected, that she's really not kind to the drug companies. So there's been a lot of anxiety there that things aren't going to do so well for the drug companies going forward. And Gilead's had their own kind of challenges also with their primary drug is under some competitive pressure. So let's see what else we have for you. We have Activision Blizzard, ATVI. I was in this one earlier and I got shaken out, unfortunately, earlier in the year. This one has exceeded the 423% line, video game maker. I'm hesitating to reinterpret this one just yet because I find that sometimes you just have to give stocks some time to recover. You don't just reinterpret them the moment they break the 423 line. Give them some time to digest that level. Okay, for some other ones, some of the chip stocks have had great moves in the past quarter, and these are all stocks I've reinterpreted to the upside. You have Linear Tech, LLTC, you have Lam Research, LRCX, also interpreted to the upside, and the other one was NVDA. All chip stocks, all reinterpret to the upside. Look at the way this came up here and just hesitated right there. So this one's been obeying the FibLines fairly well lately. Okay, one major index that I've noticed has recently broken the 423 is the Nasdaq 100 futures, the NQ. This has clearly broken the 423 to the upside. I'm considering reinterpreting it. But given the seasonal tendencies we're here in September, and the big runs we've had, again, in some of your big cap stocks, again, Apple, Alibaba, Facebook, I'm just going to give this one some time to come in, and I don't think I'm in a hurry to reinterpret this to the upside, although I might have to do so longer term. So let's see what else we have. Okay, a couple of items I have for you in the kind of in the financial realm, really nothing to do with the market generally, but credit cards. Why do I mention credit cards? Well, credit cards have great cash back right now on everything you spend. So as long as you don't have credit card balances, you're not paying credit card interest rates, you should be charging everything that you can on your credit cards to get a minimum of 1% and possibly 2% back. So things like utility bills if you can, cell phone bills, your cable bill, college tuition, anything you can put in a credit card and get 1% back, you should be doing that. As long as, again, you're not running credit card balances, paying credit card interest. In some cases, you can get up to 2% back, and I get 2% back on pretty much everything I spend, and I've already netted me like $1,000 a year in cash in general. So that's some general advice for you. And something on a completely non-financial note, I went on a vacation this past summer. I went on a cruise to Alaska, and I spent more on this vacation than I ever have really on any previous vacation. And it really kind of changed me because I got to see like glaciers firsthand. I've always heard about it, never got to see them. But I've always kind of lived my life with this perspective of scarcity. I'm going to be old. I'm going to be poor. I got to scrimp and save and every little bit of my money to, and after you see something like Alaska, you realize this country is huge. It has so much natural abundance. Flying from New York out to Seattle, I got to see miles and miles of farmland. And I realized that this country has a lot of resources. And for example, food, there's really not a food shortage in the U.S. In fact, food prices have actually been going down the last year or so, and you can Google that to see what I'm talking about. Energy prices are also at multi-year lows. Here where I live, I can get a gallon of gasoline for $2.15, and milk costs over $3.30 a gallon. So, we have a lot of material wealth in this country, huge amount of financial assets, huge amount of physical assets. Again, here's a glacier, it's a Mendenhall Glacier in Juneau. This is kind of the glacier runoff pond, and this is a stream in Ketchikan, which is one of the other places we went to. And here the salmon swim up the stream, and it's hard to see from this photo, but there's actually salmon in the stream, and the locals are allowed to catch like 1 or 2 salmon a week. I think it's actually 2 salmon a day, and 1 salmon could feed you for almost a week. It's pretty big. So the Native Indians who live in this place had so much free time in their hands that they carved these totem poles. But I just pointed out because there's it's fresh rushing water and everywhere, and I know Alaska's a tough place, and the winters can be brutal, but there's a lot of natural abundance in this country and a lot of capital out there, and it's just changed my whole mindset out of this scarcity to really enjoy life a little more and just let go with it. Let it roll. Okay, one more update for you. This one is in the financial realm. For many years, I've been a user of this product called Telechart 2000 from Warren Brothers. This is really an amazing product. It lets you sort and search through the stock market in multiple ways. I went to a training class that they did recently in White Plains, New York. And you could pick a stock, you could back up to its sector and its components and just search and slice your way through the market with efficiency. One of my favorite scans that I do here is it's a scan. It's called New High, Low PE, Positive Earnings, and it basically just look for companies that are making new all-time highs. It's kind of a sloppy chart here in the right. Let's go back to a nice easy one here. Actually, pause this. Okay, so one of the ways that I use Telechart is I have this scan called New High, Low PE, Positive Earnings. Basically, it scans the entire market, and I look for situations where the stock's at a new all-time high and has high earnings growth rate, and you have a P ratio, and you can see the dividend yield here. So I want to look for situations where the earnings growth rate exceeds the PE and the shares are at a new all-time high. So here's one, Manhattan Bridge Capital, for example, and sometimes you need to go to longer-term time frames to see that you are indeed at all-time highs here. But let's go, for example, yearly. Yeah, so we're just coming up and exceeding a new all-time high here. So here's a good International Assets Holdings Corp. Earnings growth rate of 16%, PE of 12. And it's usually the other way around. Usually, for example, of Facebook, the PE is 60. Actually, the earnings growth rate is over 100%. So I got that wrong. The PE is 60. So Facebook is one of those examples. But in this case, we can see cases where the earnings growth rate is actually higher than the PE and the shares are a new all-time high. So I use this to find stocks to invest in. And one stock that I found from this scan, it's not on the scan right now, it's called Validius Holdings VR. It's a South African information services company. I really don't know much about it other than the fact that I found it off the scan. So take a look at the TC 2000s. It's a very, very powerful program, and I pay about, I think, $200 a year to use it, and I've been a user of it for many, many years. So great program, great products. Okay, one last thing I wanted to point out that I mentioned earlier in the video is that I'm having more success, I think, lately with the range bands than the FibLines. And here's an example of Amazon, for example. If you look at this range bands indicator, look how well a job is done of keeping on the right side of the trades here. So, as the markets move up and down, especially in this bubble sort of environment we have here, where just everything is just being inflated to the upside, it's very hard to outsmart other people based on fundamentals, because everybody's looking at the same fundamentals. But instead, I think you have to look at situations where what's the actual security doing? Is it going up? Is it going down? And I think longer term, I have more confidence that the range bands are going to be able to make money, not just on a day trading basis, but daily, weekly, almost any time frame you look at. This is a great indicator, and it benefits from trending markets. So its friend is a trending market. Its enemy is a ranging market that gets chopped around. So taking that idea and try to make some money with it, I've been playing around with the system in TradeStation. I call the range bands 5-minute day trader. And what it does is it takes the range bands in 3 separate time frames. I believe it's hourly, 15-minute, and 30-minute. And when all 3 of those time frames are in sync, it will take a long position. And this trades on 5-minute bars on a daily basis. Day trading system only. It closes the trades out at the end of every day. And I found that it works very well with a handful of symbols, specifically Tesla. So here's this back test for Tesla on this range bands day trader system. It's for early 2016 to today. You see it's up about $8,000 on a $200 stock. That's about a 40% gain, assuming you traded it faithfully. And this is with 100 shares and $1 per share commission, which is standard on TradeStation. Another one it does fairly well on is Amazon. This is, again, much more expensive stock, so you're going to need a lot more capital to trade this one. But, for example, this one has done very well. And taking a look at the strategy performance report here, you're up about, I guess, about $12,000 on an $80,000 basis. So not nearly as good percentage-wise as Tesla, but it does fairly well on a handful of symbols, and it's fairly easy to test it on those symbols. Here's QQQ. Let's see how that one did. And it's equally long and short. It doesn't have any bias in the market one way or the other. So this one's actually lost money year to date, about minus about $800. So I've been kind of day trading this thing, or paper trading, I should say, inside of TradeStation, and has some spectacularly good days. For instance, in August, it did pretty bad. It got it got chopped up as the market kind of went nowhere. But we had a couple spectacular days this past week as the market rallied higher, and you can see it had a good trade here in Goldman Sachs just this last Friday to the short side. So yeah, longer term, I have confidence that I'm going to be able to use the range bands to make money, mostly because, again, it doesn't try to pick tops or bottoms or outsmart the market. It basically just follows the direction of the tradable. And I'm looking at some things like a dashboard, for example, where it will go through your watch list and tell you whether it's positive or negative according to the indicator underlying, and look for some reversal patterns, 3-bar reversals, for example. This one here, Norwegian Cruise Lines, had a reversal to the upside. So it's a very flexible method in the sense that you can use it in nearly any time frame that you want, and it also can be used to screen symbols for breakouts and breakdowns. And also, I think it's helpful in this bubble-like environment where things either go kind of up or down. And lately, they're going either straight up or straight down, and that favors a system like this. But again, if the market goes into a mode where it just chops sideways for long periods of time, it would not favor the system. So just something I thought I'd share with you. It's kind of interesting. I'm going to continue to do more development on it, and I've made the range band stop outs available to my subscribers on Thinkorswim. And I'm also going to make the range bands multi-time frame available for my Thinkorswim users very shortly. So if you're interested in my stuff and you want to subscribe to the FibLines and the range bands multi-time frame once it comes out, you can go to fibtools.sells.com. Unfortunately, I had to decom my website, so you can go to fibtools.sells.com and subscribe to the range bands for $99 in 1 year, and you'll also, for quarterly updates, you'll also get anything else that I do premium included for Thinkorswim for no extra charge in that $99. So that's it. Thanks very much for watching the video. All success in your trading, and have a great day, and take care.